Welcome to the Paradigm Shift podcast. We're joined today by Anthony Mayfield. He's the man behind the YouTube channel On the Brink book. Anthony, thanks for joining us today.
Hey, thank you, Carl.
Now, Anthony, you're joining us from Vancouver. We wanted to kind of get a feel for how the Canadian economy is doing. Canada obviously is the
Mhm.
US's largest trade partner. So why don't
Yep.
you start out by telling us a little bit about how things feel on the ground there? How are Canadians viewing their current economy?
Well, it's a little bleak right now. Actually, one of the largest pitfalls that is occurring is the disconnect between the actual Canadian citizens and understanding of the economy. We see now record debt levels actually eclipsing what the U.S. had before its housing crash. Yet Canadians on the ground are very oblivious. We have very controlled media here in Canada, actually some of the worst in the Western world. With, for example, here in Vancouver, the actual two newspapers are owned by the same company and actually publish out of the same building and are in bed with the realtors, in bed with the bankers. So although we have a lot of data to go off of for the Canadian economy just becoming bleaker and bleaker, actually the awareness amongst the citizens is probably one of the scariest things. Canadians are really unaware of what's happening right now.
Now, you bring up a good point there. You know, in talking with a lot of Canadians, they fall back, it seems, on the argument that, oh, Canada's not the U.S. We've got very
Yeah.
strong regulatory bodies that control the banks, control the mortgage industry. We're just, we avoided the 2008 crash to a large degree. We're pretty safe. But a statistic just came out, speaking of the second quarter debt levels for the average Canadian family, and that number went up to 163% of disposable income, which
Yep.
was well above the previously reported 152%. So that's
Yep.
quite a large growth. That's almost 10% growth in debt to disposable income ratios. And of course, we know from things from economies such as Greece, Ireland, Spain, when the household debt starts to get up to that level, where I'm sure a large percentage of that is mortgages and trying
Yep.
to accommodate for that skyrocketing property values, it just becomes unsustainable. And
Oh yeah.
how are people accommodating for that?
Well, again, you bring up a lot of the most common misconceptions about the Canadian economy and Canadian financials right now. All those things that you pointed to are some of the major delusions that Canadians hold, including our banks are sound. We didn't have the excesses that the US or other countries you mentioned. We don't have a housing bubble. Again, like you mentioned, the 164% debt to income, this includes, like you mentioned, mortgage debt to a large degree, which is people taking on debt to purchase homes that aren't worth the value, are probably worth half of the value if you look at historical precedents. And yet, in 2008, when we started to have a collapse of the housing market in line with the US, what people actually did was took equity out of their home with home equity lines of credits. So actually, Canadians continued to pile on debt, and instead of facing the unsustainable nature, like you mentioned, coming to the point where we're saying, yeah, this is enough, we can't continue this, Canadians are very oblivious and are continuing to take on more debt and try and dig themselves in a deeper hole. And it's really setting up most Canadians right now for a huge fall.
Now, many Americans would be familiar with the scenario you just outlined, where as prices of homes go up, they start stripping that equity out of their home, using it for consumption, for daily living, for paying
Mm.
bills. Now, of course, in America, we saw that that was fine as long as house prices kept on going up. But once
Hmm.
that slowdown started in 2006, 2007, it started to put people in a really tough spot, started to trickle down into a snowball of defaults and foreclosures.
Hmm.
Do you think that there's a similar risk in Canada?
Oh, well, certainly. I go to school at UBC, and am in class with a lot of American students. There's a large percentage of international students in the classes I take. And so when I start talking about housing bubbles and housing collapses, the Americans' ears prick right up because they know exactly what I'm talking about, and they usually have a few pretty terrible stories to tell me about. Now, the thing is that it is wholly unsustainable, and the fact that Canadians, even a year ago, were under the belief that housing prices would never fall. You know, typical bubble psychology. They were certain that getting into a housing market was going to be a sure bet no matter what. And I'm just looking at data here. You know, from the peak in Vancouver in April of 2012, which was over $1 million for the average home, that has, in these 6 months, fallen $137,000. So, you know, the housing bubble has been pricked. It's coming apart at the seams here. Vancouver, Calgary, Edmonton, Toronto, Ottawa, Montreal are all having falling housing prices, and this is the reality that Canadians have to wake up to. You know, it would have been better to wake up to this reality a year ago or 2 years ago, but the thing is, you know, no one saw it coming. The mainstream economists said it could never happen. The professors at my university said it could never happen. And yet here we see Canadians and the Canadian economy at large following in the footsteps of Ireland, Spain, the US, the UK. It's the exact same bubble that is blew up, unsustainable, and, you know, Canada is going to be in the exact same situation as the rest of these Western economies.
Now, speaking of pricks, of course, Ben Bernanke, back in 2007, poo-pooed the idea that you could have a nationwide housing collapse, which
Yeah.
is exactly what happened about a year later.
Yeah.
Looking at some of the statistics here, looks like home sales have plunged about 33% year over year.
Yeah.
Prices have tagged close behind, dropping about 11% from their peak of
Yeah.
April in 2011. But at the same time, we're seeing supply increase. The number of listings is going up month after month. So it appears like people are trying to get rid of these houses. They're maybe starting to get nervous, starting to say, oops, are we in a bubble? Maybe we are in a bubble. And they're starting to dump these onto the market. And as we saw in Ireland, once that snowball effect gets going, prices rapidly decline. 50, 60% in a 2-year space is not unprecedented. So what do you sense, talking with your friends, maybe family members who are homeowners there in the Vancouver area, what is the sense? Are people just trying to ride this out, or are they really starting to get nervous?
Yeah, well, you bring up a very good point, actually, which is the oversupply. You know, I really think that the Canadian economy can be most paralleled with the Irish economy and the Irish housing bubble in terms of just complete lack of understanding and awareness. Because what we're actually seeing right now in Vancouver and Toronto especially are mass amounts of condos under construction and coming on the market, and there is no buyers. I walk around my neighborhoods here in Vancouver, and houses are being demolished. Perfectly good houses are being demolished. Just across the street, the last few days, a house has been demolished to be put up a new gigantic house. And this is not by people who own these houses and live in them and, you know, are having a larger family and want to upgrade this house. This is pure Ponzi financing, pure speculation, and it's happening at the absolute worst time. You know, we could have just fallen off the cliff, but we have marched higher and higher and higher, and it's really brutal. And you mentioned too what the sentiments are on the ground. Well, anyone who has any sort of awareness is starting to wake up to this, and a lot of people are trying to put together plans to get out of the housing market. When I did a talk back in April of 2012, an economics professor of mine told me that she did not see housing prices in Vancouver coming down. Well, I actually talked to her in September. She had actually put her house up on the market, and we saw the reason that she didn't want to believe that houses prices were going to come down is because she actually owned property and had a stake in this. And the huge delineation is happening between people who get their information purely from the mainstream media and purely from the realtors, and those who are unplugged. You know, maybe they have a good source of information like a friend or a family member who can tell them what's actually happening. But there are still a lot of people. You know, I get messages on my Facebook account from friends of mine back in Edmonton who are, you know, 18, 19, 20 years old, saying they're going to buy a house, but they wanted to talk to me first to see what they should do about it. You know, the Ponzi scheme is ending. It's getting harder and harder to rope people in, but there's still being people lied to by the realtors who are getting in at the last moment, and they're going to be really devastated.
Well, as we know, the mania phase of a bubble is usually when people who get in at that stage lose the most. I've read a statistic that says that the average Canadian owes $1.63 cents for every dollar they make. Now, how can people feel like that kind of debt level? I mean, that's up there with Greece. How can they feel like that's sustainable?
Well, the only way that you can ever get to that point or get worse off from that point is to not think about it at all. Again, these people are not looking at the data, are not looking at the statistics. They're only getting their information from the mainstream media. They're watching American Idol and all these stupid distraction shows. If people actually took one look at the data, they would see that a crash is really, really imminent, and it's going to be brutal. 164% is debt to disposable income. That is nothing to laugh at. And provincial governments, huge deficits, municipal governments, huge deficits, the federal government, the deficits growing and growing. So this debt problem that's had so many Western countries succumb to it and have seen this Great Depression just from coast to coast is it's coming to Canada. We're not eluding it. People are really unaware, and they're just burying their head in the sand, really.
Anthony, I just read an article in ETF Daily entitled "The Canadian Housing Bubble Nears Implosion," in which they highlight that in Canada there are currently $500 billion in what are termed high-risk mortgages. Now, Americans would be familiar with that term, where basically a person is sold a mortgage that they could never afford originally, but due to low interest rates and teaser rates, they were suckered in to signing on for this loan. Now, these are on the verge of starting a default snowball. Now, $500 billion out of an economy of $1.74 trillion potentially could have cataclysmic effects. Are your government ministers there highlighting this or talking about this?
Well, we have the exact same thing that Hank Paulson was to the U.S. during the housing crash in the United States, which is a Goldman Sachs banker stationed at the post of our central bank. This is Mark Carney, the governor of the Bank of Canada, and our finance minister, Jim Flaherty, is also, like most treasury secretaries or finance ministers across these Western countries, is completely in bed with the banks, has been saying since the beginning that a housing bubble could never happen. These guys are kind of playing a very deceitful game, because they come out and, tell Canadians, for example, Mark Carney telling Canadians that they shouldn't take on debt and they should really stop with the debt and really stop with the debt. Well, people's incomes are falling and their costs of living are rising in this consumer economy with record level low interest rates. It's not a mystery why people are continuing to take on debt. Unfortunately, our ministers are not going to help us. I think what they're trying to do is just wait for the collapse and then manage it, as opposed to trying to take measures to avert it. So they're not raising any alarm bells. Really, it's not going to be until it's too late before any actions by policymakers or Canadians at large is taken.
The story seems to be ironically familiar. Starting in 2002, Canada, its central bank, engaged upon a series of easy monetary ventures which lowered interest rates, made credit highly available, and encouraged people to start spending and consuming at record levels. Now, as we saw in America, once those credit markets start to tighten or restrict, as a result possibly of housing markets or default levels increasing in the housing market, people are going to start seeing that credit and the ever-expanding availability of credit is no longer there. And we're going to start seeing credit card defaults, housing defaults, available disposable income at the end of the month dropping. So as far as the average Canadian person, are you seeing anybody taking any measures to prepare for that? Is that even at the forefront of their mind? Or are we simply looking at a feckless approach saying, markets will always go up, houses will always increase, and there's always going to be a silver lining?
Yeah, again, there's a real dichotomy growing between Canadians who are aware of what's happening, which is actually a pretty good portion. There are a lot of Canadians who use the internet and alternative media as their sources of information to build their models of reality, as opposed to the mainstream media. So there's this real delineation of actions that are being taken by those people who rely on, the National Post or the Globe and Mail, some of these really corporate media sources, and, people tuning into podcasts like this, for example, or Kaiser Report, or any kind of alternative information. And it truly is the familiar story for anyone who has watched what's taken place in Spain, Greece. You know, if you ask the average Canadian, though, what's happening in Greece, what's happening in Spain, they would have no idea that the exact same thing is occurring here in Canada and that they're going to be next. But, you know, there are that small pocket of people who are, you know, collecting precious metals and trying to get themselves out of debt and trying to take the blinders off their eyes and see the world for what it really is and see economics and finance for what it really is.
You mentioned Greece there, and of course, Greece sprung onto the international stage almost covertly. They had been allowed to enter into the European Monetary Union because of some creative financing from firms such as Goldman Sachs, and it almost feels like there's a similar subtlety to the looming crisis in the Canadian economy. You know, here in the U.S., we haven't heard too much about it. It sounds like even in Canada there might be a large percentage of people that aren't familiar with it. So if this all of a sudden springs upon the Canadian people, are they big savers in Canada? Are they, you know, fiscally conservative people? It doesn't seem like they are, but what impact's that going to have on the daily life of the average Canadian?
Well, you know, it's not too hard to speculate as to what's going to happen because this slowdown that occurred in 2008 across the world hit Canada particularly hard. You know, we were able to export a lot of commodities and take on more debt, so we didn't bear the full brunt of it. But, you know, you saw unemployment spike. You saw housing prices start to fall off a cliff. We saw the government take measures to bail out the banks to the tune of $117 billion, with donations also included from you guys' Federal Reserve Bank there in New York. So this idea that it's going to kind of sneak up on Canadians, well, this is only for the Canadians who are you know, asleep at the wheel. Most people who saw what happened in 2008 and didn't just shrug it off, didn't just say, oh, well, we dropped interest rates and that must have been the recovery. These people see what's coming, but again, it's gonna seem subtle. Like, how can you say that a $117 billion bailout is subtle? That is the furthest thing from subtle. But to people who don't know about it, it just didn't happen. To people who don't know about it, that never occurred in history. To them, the banks are perfectly sound and have nothing to worry about. They don't have $5 billion of exposure to high-risk mortgages. They just close their eyes and they don't think about it.
Now, Maclean's had an article published recently talking about the levels of household debt. And they asked the question, will Canadians simply default on mortgages and their consumption debt as Americans historically have done and you know, to large degrees in the recent fiscal crisis. Now, they make the point that Canadians have actually been paring back their household debt in some degree, but the problem here, of course, is the dangers that these home equity lines of credit, these HELOCs, present. So people stripping the equity out of their home, using it for consumption, and then as those house prices start to go down, there's not as much equity available to strip out, and those lines of credit decrease. So could it be a case that the normally conservative Canadians all of a sudden, through desperation, through fear, start to become a little bit more like their neighbors to the south?
Well, there's a few things there. For one, I just want to give you a little bit of a story as to some of the information people are receiving. There's actually a video by a realtor here in Vancouver who she was trying to seduce the camera and really come onto the camera. This was a video on YouTube. And she was actually advising people in Vancouver who, you know, have taken on insane amounts of debt to buy a house, which is the average is over $1 million. Now, she was advising people to take equity out of their home and use it as a down payment on a condominium purchase, where she admitted in the video that the condominium is falling off a cliff in price. Now, if this is the kind of information people are receiving and they're actually acting as if this information is going to help them, well, then we already know what's going to happen when people take on debt. You know, they leverage themselves again. They take equity out to leverage themselves up again. You know, it's like you mentioned, it's wholly unsustainable, and it's just really going to be when the tide turns, which it already has started, we're going to see a lot of Canadians who were kind of just lulled to sleep by our realtors, bankers, heads of media. They're going to have a harsh reality to wake up to.
I find it interesting that you mentioned that news report because Moody's recently came out and seemed to uh, put forward the idea that because most Canadians don't have a second mortgage or a second property that's mortgaged, that any housing crisis is likely to be shorter and shallower than we experienced here in the US, where it was quite common to have second mortgages and second properties in a lot of cases. But it sounds like that trend is actually changing, that Canadians are looking towards getting out second mortgages, perhaps investing in second properties. Is there a sense there that if I don't get in now, the prices are going to keep rising and I'll miss my chance?
Well, that started all the way back to 2001, 2002, where, like you said, the interest rates were dropped to record lows and kept there. That was when, people really got the idea that I better get into this Ponzi scheme as quickly as possible. I do think that the level of just pure speculation, where we saw in the US, if someone asked you, can you afford to purchase a house? The question was instead, can you afford not to purchase a house? Because the value was going up at such a rapid pace. How could you afford not to get in on that gravy train? But here in Canada, I don't think that purchasing homes and second homes and just sitting on them and watching the price go up is as bad as a problem as it was in the US. But the mortgage restrictions, and I'm not totally certain on this, but when people default on their debt here, it's not like it was in the US, where it gave a large incentive for people to just default on their mortgage when it went belly up. Here, it's much harder to actually declare bankruptcy, and they get into the banks can take a whole lot of other assets. So I think it's going to end up looking more like Ireland, where people are going to be lobbed into negative equity and are going to have to work for years and years to get to 0% equity to be able to sell a home, which, at one point seemed like such a blessing, but it was really the Achilles heel of most people's finances.
Of course, many people in Ireland would be familiar with that. The bankruptcy laws there are quite archaic, and exactly as you mentioned, people are literally stuck working night and day just to break even so that they can possibly unload a property. Finally, as you know, currencies around the world, we've reported on this, a paradigm shift. Nations around the world it's a race to the bottom to try and devalue their currency, to stay competitive, artificially competitive. Canada obviously is stuck in a global economy. They can't allow their currency to get too strong because then they become economically lagging behind. So what are Canadians seeing in relation to inflation and price increases? Are price levels increasing to a degree where people's disposable income after they've paid for their massive mortgage is just diminishing month by month?
Well, that's exactly it. Canadians by and large are, polite people, and they don't really like to go against the grain. I'm generalizing to a large degree here, but it's true. Most Canadians want to just, work, have a mortgage on the house, have, the Canadian dream, the kids, etc., etc. And so they just want to have their job, come home, put their money in the bank. But what people don't realize is that they're actually set up right now with negative real returns on the money that they're saving. Now, our numbers are as hacked up as the American numbers, so our inflation numbers, of course, don't actually reflect reality. Again, they don't include energy and food costs, so really, what is the point even? And of course, there's hidden inflation occurring here in Canada. I've caught the grocery stores a few times, keeping the price the same on items, but decreasing the actual size.